When it comes to making money as an investor in the financial markets, green energy is all good and nice. But today, let's talk oil. Hello and welcome to another video by HKCM Global. My name is Joe, and I really noticed that in the last couple of weeks, I've been talking about new energy vehicles, I've been talking about electric car manufacturers, I've been talking about cannabis, even crypto, but something that I barely spoke about this year even, or at least in the last couple of months, is the one thing, the magic liquid that makes the economy go round: oil. So that's why right now we're jumping into three titles regarding oil. We're gonna look at Chevron, huge giant in the American energy sector and hugely promising in the upcoming weeks. We're also gonna talk about then the two oil brands that we analyze on a daily basis. As you know, link down there in the description if you're interested in that, WTI and Brent. And so without any further ado, it is the weekend. I don't want to keep you here longer than necessary. I just want to deliver value for you to guide your financial decisions in the markets. So if that is something that you would want to acknowledge with a free channel subscription and turn on the bell notifications, I'd highly appreciate it. So talking about Chevron then. Chevron is probably a name that you have heard in the past. If not, I'd be surprised. Chevron, one of the biggest American oil companies. They do exploration and they do also refining. So hugely involved in the whole oil sector. And if we look at the chart picture and our Elliott Wave projection here for Chevron, it's pretty clear that in the upcoming weeks, in the meantime, we really are getting into a short target zone and the air is getting thin. So from current levels today, as we speak, Friday, we are only about 5%, barely 5% from the lower threshold to our target zone here. And that means, of course, if we go into this target zone here, it's a short target zone, and if the price action moves into that target zone, it will be time for us to either take profits on already existing positions in Chevron or even go short Chevron to then profit off of this projected upcoming sell-off that we see in Chevron of at least 30%, but we're gonna look at that in the overreaching time frame in just a second as well. Because right now, as we see it, the picture projects itself rather clearly. So of course, our primary scenario is here the sell-off from this target zone and potentially here the optimum target somewhere around $165 for the sell-off to occur. However, in the current structure, we also do have a short-term alternative scenario with here an overshooting B wave. That would mean that the B wave that we conclude in the primary scenario over here is not yet finished, but that the B wave would still be in the making and would finish over here in an area of $175 to maybe potentially $180 here in Chevron. But nevertheless, one way or the other, either in this primary scenario or in this alternative scenario with here the overshooting B wave, nevertheless, we would be looking with the next move definitely at a huge sell-off coming into the stock of Chevron, taking us potentially down all the way to roughly $100. And whilst we're here on this overreaching time frame, you can really see the frustrating situation for investors in Chevron in the last year. So ever since the high of the stock in June of 2022, so just shortly after the Russian invasion to Ukraine, that's where we saw the high in the stock. Well, we saw another corrective, slightly higher high still in November of 2022, but I mean, to be honest, if you went into the stock of Chevron and you held it for half a year and all you had to brag was like 3% of gains, that's nothing to be proud of. So the real significant high that we saw in the past in Chevron has been established here in June of 2022. And ever since, we have been in a long and dragging correction for a final wave too low to potentially finally come into the stock of Chevron in the upcoming weeks. And so far we have seen an A, B, C leading to an overreaching A corrective wave. And so far we have finally, after this long and frustrating dragging along, completed the overreaching wave B and are now currently in the making of this final wave C that should take us down in the just before mentioned area of roughly $100. And that's where we really see this overreaching wave 2 bottom in. And what follows a wave 2 bottom, of course, is an impulsive wave 3 to follow, taking us to all new highs probably well above $200, potentially even all the way up to $300 even. And that is something that I really get excited for. But then that of course begs the question, what about the underlying asset, right? We're talking here about an oil company, an oil exploration and refining company. What about the underlying asset? What about oil? What is our projection here? And that's what I'm gonna share with you right now. So first of all, we have to look at WTI, one of the two oil brands that we analyze on a daily basis. And if you want to get updates on a daily basis as well, as just mentioned before, link down there in the description. That's where you can find a website where we not only analyze oil, but 200 different values on a daily basis, stocks, commodities, cryptocurrencies, you name it. But back to oil then, here and now. Okay, so here in the most imminent time frame for WTI, we are currently fighting here with the support level at $63.64. And as we speak right now, the price action of WTI is really fighting here with the support, and it remains to be seen now in the upcoming hours if we remain above the support and then can successfully climb here into our target zone for also a short here in oil, or if WTI really manages to break below the support and already start its descent into our overreaching target zone here. Again, likewise as with Chevron, for an overreaching wave 2 into the area somewhere between $49.85 to all the way down to potentially even $28 a barrel. And that is a big target zone, I know, but especially after these huge wild price action. First of all, we had oil even in the negative with the COVID shock that came into the market. Then we had the Russian invasion to Ukraine. So over the last couple of years, oil was on such a choppy ride like barely before ever in the history of this commodity. And that's particularly the reason why after such wild price action here, a target zone for oil has to be constructed rather broadly, because otherwise you will just risk oil completely overshooting or undershooting that target zone, and that is no benefit for nobody. But most importantly then, what you need to know is that as soon as we reach here this target zone for oil on the overreaching time frame, we will definitely be seeing a significant bottom in the markets. Remember, we conclude that ever since this low here, even in the negative in the futures, we have seen an overreaching wave 1 top at back then $130 per barrel. And ever since, we've been in the corrective wave 2, leading us down potentially even below $50 per barrel. And as soon as we manage to establish here this wave 2 low, we'd be looking at significantly rising prices over the next couple of years. And of course, that hurts me. I use my car quite a lot, drive many miles every single year. And if we see oil prices going crazy like this, of course, this would hurt my wallet at the pump station. No question about it. But at the very same time, at least an entry here at this potential wave 2 low would give me the chance to bring a hedge into the markets to go long oil. So even then, when I have to pay those higher prices at the gas station, at least I have some nice profits racking up in my portfolio to offset those higher prices that I'd be facing. But then of course, what would that mean percentage-wise? If we're talking gains already, what are we talking about? So from here, an optimum target inside our target zone at roughly, I mean, let's say $42, right? Let's not go too bold, let's stay rather conservative. So from this level here, from roughly $42, we'd be looking for at least $350 of price gains in the next overreaching wave 3. And remember, we're talking commodities, we're talking oil. That will not be a move that you can expect in the next weeks or potentially even months. This is probably going to be a move that will entertain us for the next 2, 3, 4, maybe even 5 years. So a real long-term wave that would be coming here into the markets. And so it's even all that more crucial that you are prepared for this upcoming move here. And then let's also talk Brent. Brent, the most important European oil brand. And I mean, you can probably guess it for yourself. A similar picture that we see here. Same as with WTI. We still have hopes in this overreaching wave B target zone to go short here on oil. But right now it is not looking good. It really looks like already oil is breaking out to the downside and is starting the direct way into our target zone here. Again, we also have here a long target zone for an overreaching wave 2 for Brent. Only the price levels are a bit different because based on previous price action, we have concluded this target zone for Brent here at only $42 on the upper threshold. and $29. Well, I mean, let's say $30 around on the lower threshold per barrel. But then again, the overreaching picture looks quite similar here for Brent. We likewise had this wild price shock back in 2020 during the early lockdowns of COVID. We likewise had this huge peak in the markets at the Russian invasion to Ukraine. And we've ever since been working on this overreaching wave 2 low that is now finally nearing its target. I mean, still around roughly 35% more to go to the downside. That's the reason why we still hope for this short targets on here to be reached, because 35% is quite a nice move, something that I would really like to pocket in. But we have to stay alert and watch the market closely and see what the market gives us here. So that's why, if you ask me personally, I would right now not jump into the market and hopefully then jump into the very middle of this already beginning sell-off. I would really wait here for this target zone here to then finally go long. Because if the market fails to reach a short target zone that we bring on the chart, there is always this chance that there's some new, rather complex price action developing that is in contradiction to our primary scenario. So that is a chance. I have to be honest with that with you. That's the reason why we have our target zones, because those are points with huge confidence in the markets. And if those target zones are not being reached, forget about it. Wait and see. Wait for your chance to really get into the market. There's no gain in jumping in and out of the markets every other day. We really have to be patient, like a hunter, being patient and waiting for the perfect opportunity to deliver the killing shot. That is how you make money in the markets, and that is how you bring long-term substantial wealth to your portfolio. Right then. Hope that was a lot of free value for you. Enjoy your weekend and see you in the next one. Take care. Bye-bye.